Good morning, everybody. This is Mark, and we're back for T3 Live. So, yesterday I was saying, I'd expect some more weakness that's going to come this week. Charts really at this point are looking like they're in a little bit of trouble after a 4.5, month uptrend. You got to be a little bit more skeptical on the long side. Doesn't mean you can't go long. It just means you shouldn't just blindly, cast a wide net. You got to be a lot more specific. And we're seeing that more and more. And obviously this morning, we're down a bunch, but even yesterday was important. I was actually a little surprised we rallied like we did, but you had the DAX and the Euro, rallying nicely, closing pretty nicely, up a percentage or two off, from when they were gapped down. We are a world market at this point in time. It's important to know what the world markets are doing, where they close. Obviously, it gives us a little bit of an inside look on what to look at. So this morning, obviously with the big gap down, after a rally of yesterday, at some point this gap down is going to stick. Is it going to be today? I don't know. I still think it's a market of stocks. Meaning we played Apple yesterday. I talked about it early on. At some point it's going to try to find some levels to bounce from. I don't want to see it to go too far too fast, but at the same time, I'd like to see this constructive action over the next few days, 560 to 575. Try to find a new level to really base from in order for it to obviously, resume its uptrend. Not quite there yet, but understand that's my thought process. Then some of the other high betas that I've been watching are certainly showing some weakness. CMG didn't really show me too much. Priceline has broken some key indicators, but the fact is earnings are out. I believe it's tomorrow, so that could change a whole lot. Yesterday we saw a little bit of strength in banks. No trade there either way from the long or short side at this point in time. Goldman's hanging right at its 200-day moving average. It's trying to find support, but it's very lifeless. And this morning, I think you're going to have some, weak retailers. Fossil came out below expectations, down. Last time I looked, it was down 29. It's down 30. Below its 200-day moving average at this point in time. Perspective back to where it was in early January or mid-January. So it hasn't gone too far. It's not like it's getting destroyed. But obviously if you're long today and you're down, 24%, you're feeling it. So hence why I've been saying I have not had a big, a lot of swings on, if any. I'm not in that mode. If anything, I'm looking for rallies to be shortable. I'm looking for big pull-ins to be buyable. If it's status quo, meaning the stocks are just basing, I'm going to let them base. I'm not interested in adding to my swings at all at this point in time. I think cash is a good position to be in. I also think don't short new lows, just like you haven't been buying, and we haven't been buying in this whole rally, new highs. The key is, I would say a Google type stock, up to 610, 612, 615 is some resistance. I'd be looking to short it at that point in time. It's, for a move back down to 600. These are the trades I'm looking for us to get involved with. I don't think I have any A-plus trades today, but at the same time, Apple's going to be on my radar. I do like how it's up a little bit this morning. Amazon could use a few more days of back and forth action for the set 10-day to catch up. It's around 217, 218 at this point in time. And like I said, I'm trying not to cast a wide net, so, I eyeball the banks, I eyeball oil, but nothing too exciting and really nothing to talk about. Don't get yourself caught up in those type of plays that, quite frankly, it's a zero-sum game right now. Good luck today, and again, always be strategic.